Welcome back to Fast Market here on the TD Ameritrade Network. I'm Tom White, joined by Kevin Hinks. Let's bring in our next guest for our cash tag segment. That's going to be Andy Swan, the co-founder of LikeFolio. Welcome back to the show, Andy.
Happy Monday.
Happy Monday. It's all about the consumer this week. We've got a lot of the big retailers reporting. Now, I think if you look at Home Depot and Lowe's going into their earnings reports, I think there's going to be a lot of different factors, right, based on the housing market doing poorly, inflationary pressures. What kind of data are you guys seeing out of LikeFolio into earnings?
Yeah, it's kind of a, both of these companies are, now navigating into extraordinary headwinds after, many, many years of an almost free money tailwind at their back. Things have really shifted. And when we look at Lowe's and Home Depot, we always like to compare them versus each other, and then against, the global kind of macro environment. And so when we look at Home Depot and Lowe's, we're seeing some growth on a year-over-year basis out of both. I would say Home Depot definitely leading the charge versus Lowe's. I think outperforming Lowe's, particularly because Home Depot counts on half of its revenue coming from professional service providers, whereas Lowe's only gets about 25% from professionals and the other 75% from do-it-yourself home remodelers or working on projects at home. So we see Home Depot and Lowe's with slight growth. I would say that's really starting to slow down. You can see Wayfair way over on the left, starting to see some significant declines in that. And I think that's coming for all of these companies. We'll start to see those declines. It will be difficult for Home Depot to put up a really rosy, optimistic, forward-looking picture. I think that there's so much uncertainty about interest rates. There's a little bit of slowdown in the housing market that could turn into an overall freeze if mortgage rates remain this high for very long, relatively speaking to where they've been. And so I think, as we head into this earnings event, we're expecting Home Depot and Lowe's to both put up decent numbers that about match expectations for the prior quarter. But the reality is they're going to have a tough time putting out forward-looking statements that excite investors. So we think for both, probably the risk, especially after last week's move in the overall market, the risk is probably to the downside for both of these, more so for Lowe's than Home Depot because of, again, Lowe's reliance on do-it-yourself home renovators rather than professionals, because we're really seeing that professional side of things stay firm, whereas the individual consumer that's going out and deciding to repaint, remodel, or take on some home project has really fallen off considerably as interest rates rise and as finances get tight at home.
Yeah, Andy, I think you touched on something here that's really important, which was Thursday's price action in Home Depot from $286 to $314 last Thursday, and it's real simple. The lower CPI data led to lower interest rates, favored all housing and then Home Depot. And not only are they did well because of that environment, but what you said, it looks like for a while there, Lowe's was putting up a pretty good fight in terms of competition, but it looks like Home Depot was reestablishing itself as the clear leader in this segment. So as long as, I guess what I'm asking you is, as long as interest rates come down, housing's going to get a little better. That should really favor Home Depot, right? And this stock is about $100 off its high, $110.
Yeah, I think Home Depot has the better upside compared to Lowe's in a in a lower inflation, lower interest rate environment. I will say, it kind of smacks me in the face a little bit as a little bit of an overreaction to the upside when you're adding 10% to a company's value because core inflation comes in at 7-something%. That's still a really high percent of inflation. That still means families that are sitting around trying to figure out what to do, they're still looking at grocery bills that are very, very high, and probably that repaint the kitchen project has fallen down the list a little bit, I would assume. And that doesn't change just because CPI comes in a little bit lower. So I wonder about, if the market got ahead of itself last week, especially when it comes to companies like Home Depot and Lowe's, which seem so interest rate sensitive. I understand the excitement that maybe things had topped out from an inflation perspective, but the reality on the ground for consumers is still very dicey heading into this winter. And I just don't see Home Depot or Lowe's at this point as being super attractive upside plays.
Yeah, and you bring up a good point, Andy, because the things that the consumer was pulling away from over the last maybe 9 months or so is buying things, right? And maybe redoing their house. Maybe they did it in 2020 and 2021 when every Home Depot and Lowe's was packed because you couldn't go anywhere. But we haven't seen a drawdown in demand for travel or people going out and doing something else with their money, paying for experiences. Is that the caveat here? Because I noticed that you have the weak guidance here to the right of one of your charts here.
Yeah, when we look at, LikeFolio just looks at purchase intent mentions, that's consumer demand, the number of people that are talking about shopping at Home Depot, either online or in the store. You've got a really big COVID bump. Everybody knows that happened during the pandemic. People shifted towards really kind of redoing the house that they're in, making that place better. The fall off has been, kind of controlled. It's been okay, but now we're starting to see this disintegration of demand start to take hold. You can see it on the far right of the chart. The current quarter is the one, the lightest shade, and it's showing that the projected quarter that we're in right now looks weak. And that's one of the key things that we like to look at LikeFolio as we head into an earnings report is, does the company probably or probably not have reason to be very excited about the current quarter? They're watching the cash register receipts every day, and we'll be able to project this quarter with some certainty. And I just don't think that either one of these companies is going to be able to come out and say this is going to be a gangbuster quarter because inflation came down from 8-something% to 7-something%. I just don't see that as the reality on the ground. I think they're going to have to stay cautious with their outlook.
Definitely. Now, going into this, you got an earnings score. You said you're maybe, not long-term or, bullish on this name.
Yeah, we think that especially given last week's action, we think a post-earnings pullback for both of these companies is probably in the cards, probably more so for Lowe's than Home Depot because they at least have that professional class diversified portfolio factor to lean on a little bit that gives them some indication that they may have revenues that can make the mark in the fourth quarter. But I think both of them a little bit due for a post-earnings pullback.
All right, great stuff as always, Andy. Appreciate it. Have a good day.
Thanks, you too.
All right, that's Andy Swan, co-founder of LikeFolio, breaking down the data here on Home Depot.